Welcome to the first lesson of our course on day trading for beginners. In this lesson, we'll start with the very basics by answering an essential question. What is day trading? Day trading is a style of trading in the financial markets where an individual buys and sells financial instruments like stocks, currencies, or commodities within the same trading day. In simple terms, it means opening and closing your trades in a single day. Unlike long-term investors who hold onto their assets for weeks, months, or even years, day traders aim to capitalize on small price fluctuations within the span of hours or even minutes. Now you might be wondering, why would someone choose to day trade instead of investing for the long term? Well, the appeal of day trading lies in the potential to make quick profits. Since day traders execute multiple trades throughout the day, they can theoretically benefit from short-term price movements in the market. However, it's important to understand that the very thing that makes day trading attractive, its fast pace and potential for rapid gains, also makes it risky. We'll explore those risks in more detail later on, but for now, keep in mind that day trading requires discipline, quick decision-making, and a strong understanding of market dynamics. Now let's break down how day trading compares to other types of trading and investing. Many of you may have heard of swing trading or long-term investing. Swing traders, for instance, hold on to their positions for several days or weeks, waiting for a bigger price movement before selling. Their strategy is to capture a significant chunk of a price trend over a medium time frame. Long-term investors, on the other hand, take a much broader approach. They buy assets and hold them for years, based on the belief that the value of those assets will appreciate over time. Day traders are different because they don't hold any positions overnight. All trades are executed and completed within a single day. This allows day traders to avoid overnight risks, like the market reacting to news or events that happen when the markets are closed. This characteristic of day trading, avoiding overnight exposure, is one of its key defining features. Another important distinction is the frequency of trades. A long-term investor might make a few trades a year, while a day trader can make dozens in a single day. The volume of trades is what allows day traders to benefit from small price movements. Let's say a stock rises by just 1% in a day. For a long-term investor, that's hardly noticeable. But for a day trader, that 1% could mean a significant profit if they've invested enough capital and managed their risk properly. Now that we've established the basics, it's also essential to acknowledge that day trading isn't for everyone. While the possibility of quick gains can be exciting, it comes with high risk. The market can be volatile, and prices can change rapidly. Without a solid strategy and risk management, day traders can lose money just as quickly as they make it. That's why it's so important to approach day trading with the right mindset, a good plan, and a thorough understanding of the risks involved. It's also worth noting that day trading is often considered a full-time job. Successful day traders spend hours in front of their computers, monitoring charts, analyzing price movements, and executing trades. It requires a high level of commitment and focus. If you're thinking about getting into day trading, you need to be prepared to dedicate time and energy to learning the craft. It's not a get-rich-quick scheme. It takes practice, discipline, and continuous learning to become successful. Before we finish this first lesson, let's recap what we've covered so far. Day trading involves buying and selling financial instruments within the same day, with the goal of profiting from small price movements. It's different from swing trading and long-term investing, in that it involves a higher frequency of trades and eliminates overnight exposure. While it offers the potential for fast profits, it also comes with significant risks. That's why a solid understanding of the markets, a well-thought-out strategy, and the right mindset are critical for success. In our next lesson, we'll dive deeper into the financial markets and discuss the different markets day traders can operate in, including stocks, forex, and cryptocurrencies. This will give you a better understanding of the playing field and help you determine which market might be the best fit for you as a day trader. Thanks for joining me in this first lesson, and I look forward to guiding you through the next steps on your day trading journey.